Hello traders, Gary Wagner here, just after 12:30 in Honolulu, 6:30 in New York. It is Friday, 12th day of June, 2020, and this is the daily report for gold and silver, our weekend review, and what an interesting week. The question is as follows. We saw gold trade to the bottom of the range a week ago Friday. We saw the market move up consistently 3 out of 4 trading days, and today fractionally higher. But on each and every occasion that we've seen the market run up to this price point, it is stalled and then moved back down. In other words, we have been caught in a sideways trading range. So the real question is whether or not this week's move will result in breaking above the long-standing resistance line and move to higher ground, or whether it will just trade back in the channel. We'll see how the market unfolds next week, but first, let's take a look at our current pricing and then to our technical studies where we will discuss that exact point. This has been an interesting week to say the least, with U.S. equities recovering from the dynamic sell-off witnessed yesterday. Dow down over 5%. Today, we have a mixed bag in the precious metals. First of all, we have gold futures. This is based on the most active August contract, closing lower by $2.50, currently trading at $1,737.30. However, the opposite has occurred in spot. Spot closed up by $2.26 and is at $1729.65. Platinum did trade lower on the day, but fractionally down about $3.60 at $820.40. Palladium gained today almost a full percentage point, and that is currently fixed at $19.28. Silver futures actually got hammered in the market, losing 1.7%, a total of 30 cents, and is currently fixed at 17.58.5 cents. All of the precious metals did have to overcome some pretty serious dollar strength. Dollar up about 0.3% today, but it really was up about 0.5% yesterday, and that's after falling over the last couple of weeks. And lastly, Bitcoin futures did close up by approximately $205. That's a net gain of 2.2%. And if you want more complete analysis on Bitcoin futures, simply click on the Bitcoin button at the top of the screen, and that will allow you to view our complete Bitcoin blog, which is done by Joseph Wagner. We are looking at a daily candlestick chart of the continuous contract of gold. When we look at today's activity, although it closed lower by about $2.50, you can see that the daily candlestick shows that the differential between the open and close is very small. This is very much like a doji, which means that the market is consolidating. Now, we had a nice run up this week. There's no doubt about it. It began on Monday, and then we had follow through on Tuesday as well as Wednesday. We had lower pricing yesterday, and today we had slightly lower pricing. The key is this. We know that this market has been trading in a very, very narrow range, and we can honestly say that it's been a sideways range between about 1660 on the low side and 1760 on the high side. So the fact of the matter is, gold did trade higher this week, but until it breaks above some key levels, my concern is that we're still trapped within the channel. We'll see it hit the top of this channel sometime next week and then begin to trade lower. We need to see the market break either above or below this narrow range. And I believe it will break and break to the upside, but we'll have to wait and see how the market unfolds next week. We're looking at the same daily chart. Although I have converted our candlestick charts into Henkinashi or Japanese average charts, you can see that on Thursday as well as Wednesday, we could see that the trend was actually fairly strong to the upside. We had the absence of lower wicks. We had nice body size. Now today is a little bit different. We've got a very, very small body size, but more importantly, we have a lower wick. And that lower wick represents a possible pivot point. Even with the gains of this week and the way that we have seen gold really move from 1450 back in March, when we look at a weekly chart, and this also is in Henkinashi format, take a look at the last 3 candles. They are all red. They are all small-bodied doji-like candles, and there are wicks on both sides. That is a very, very strong indication that there is some severe resistance, major resistance at 1760 and above, and could in fact be signaling lower pricing over the next couple of weeks. When we look at a weekly candlestick chart, we can see that we did have a strong week. There's no doubt about that. However, what is alarming to me is that we did have a lower high. We did have a higher low. That's an inside trading day, but we still have a series of lower highs that are coming into the market that tells me that there is a lot of resistance at these current top prices, anything above 1750. We have not been able to see gold hold that price except for two occasions, here and here. And even on a daily candlestick chart, we can see that we have had real resistance that is come in. I have two basic trend lines. One is fixing these two highs here, as well as here. And the next one is starting from this high to the recent highs. And what we can see is we are continuing to get a series of lower highs, and we have absolute resistance between 1750 and 1766. We need to take those price points out on a closing basis to say that we've developed a long-term trend rather than a sideways market, which is what I believe we are still in. To view the Bitcoin blog, you simply click on the Bitcoin button. If you are a member, you'll see that the button is at the top of the screen. If you are not a subscriber, simply scroll down to the bottom of the page, and there you will see the Bitcoin and gold buttons. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.